Alright, for this video I wanted to do a walkthrough of a Form W-2 wage and tax statement for the 2023 tax year. And so we've got a W-2, a sample W-2 here, and we've got the Form 1040 for the same taxpayer. So we'll have a look at each box that's completed and how those items are reported on the Form 1040. And if they're not reported, we'll explain why. So on the left-hand side here, pretty straightforward. We've got information on the company that's the employer and then the employee's information. So employee's social security number at the top. The EIN is the tax ID number for the employer, and the employer's name and address is listed in box C. Boxes E and F, we have the employee's name and address, and then the financial information starts in box 1 at the top here. So box 1, wages, tips, and other compensation. This is the total compensation for the employee that is subject to federal income taxes. What's important to remember here is this is often not your gross pay, right? This is just the gross pay that is subject to federal income taxes. So when we talk about box 1 wages, the $220,000 figure, that is the amount that is reported on your Form 1040 on line 1A, right? So line 1A, we have the total amount from Forms W-2, box 1, right? So when we see box 1 wages, that's what they're referring to. Now, for Social Security and Medicare wages, boxes 3 and 5, we have the total amount of compensation that is subject to those payroll taxes. So Social Security wages, the maximum amount of Social Security wages that were subject to tax in 2023 was $160,200. So because John's compensation is over that amount, the SS limit applies there, right? So even though his total taxable compensation for Medicare wages was $225, the maximum amount that's taxed at the SS 6.2% tax rate is $160,200. So when we look at box 4, the Social Security taxes withheld, the $9,932 is 6.2% of those Social Security wages. So $160,200, 6.2% means your employer withheld $9,932 wages of Social Security tax. Now, Medicare wages and tips, there is no limit really on how much of your compensation is subject to Medicare taxes. So the full $225,000 here is subject to the 1.45 Medicare tax rate, and then there is an additional 0.9% that applies to wages over $200K. Before we look at that calculation, talk about some of the differences here. So notice how the wages in box 1 is $220,000, the Medicare wages is $225,000, so there's a $5,000 variance there. The most common variance that we see between boxes 1 and 5 or even 1 and 3 are the 401k contributions. So when we look at box 12, code D, the $5,000, code D represents the amount of pre-tax 401k contributions that you have made to your company's 401k plan, right? So when you make contributions to a 401k plan, those contributions are a pre-tax deduction for federal income tax purposes, but you do not get a tax deduction when it comes time to calculate your Medicare wages and tips. So that's why we see the variance of $220 versus $225, and that's because of the 401k contributions that John made to his company's 401k plan. Now, in box 2, the federal income tax withheld. So this is the amount of federal income taxes that your employer withholds on your behalf that you are eligible to claim as a payment on your return. So John had $50,000 of federal income taxes withheld, so that amount is reported on page 2 of his 1040 in the payment section. So we have payments here on line 25, federal income taxes withheld from Forms W-2 on row A, and there's the $50,000 figure. All right. Now, more on the Medicare taxes withheld, because this applies in John's case, but not all taxpayers. So if your Medicare wages exceed $200,000 for the year, the full amount is subject to that 1.45 Medicare tax but there's an additional 0.9% that applies on anything over 200K. So when we look at this reconciliation here, the amount of Medicare taxes withheld by the employer were $3,488, and so that comprises these two amounts, right? We have the $225,000 times 1.45%, so that's the $3,263, and then we have the additional 0.9% on $25,000, which are the wages over 200K. So the $3,263 plus the $225 gives us the total Medicare withholding of $3,488. Now that's important because when we have a look at the Form 1040 again, there is an additional form where we reconcile the amount of additional Medicare taxes that we owe plus the extra amount that was withheld. So if we have a look at John's 1040 here, if we jump down to the Form 8949, this is where we compute our additional Medicare tax. So in Part 1, we have the total Medicare wages from our Form W-2, Box 5. That's the $225,000. And based on John's filing status as a single taxpayer, the $200,000 threshold is what applies here, right? So $25,000 is the excess. So on the tax return, we know that we need to pay the additional $225 of taxes on the Medicare wages. And then in the bottom section in Part 5, we have the withholding reconciliation, which shows that this amount was already withheld from our wages. So the reason why Part 5 is important, because if you have multiple jobs during the year, none of which met the $200,000 mark, your employer would never have to withhold the tax. But if you have multiple jobs and it exceeds the 200K, if you're a single filer, you would have to come up with that payment separately. But in this case, we can see the Medicare taxes withheld on his W-2. That's the $3,488 figure there. $225 is the amount coming through from line 1. So the total amount based on the 1.45% rate is $3,263. And so we can see the excess here. The employer withheld the appropriate amount of excess. That's the exact amount we owe. So the additional amount of withholding that's already come out of our paycheck is reflected here on line 24. So when everything is said and done here, if we go back to page 2 of the 1040, what we'll see here is $225 is that additional Medicare tax that we owe, but we've already had it withheld on our W-2. So these two effectively, offset, right? We owe the tax, but it was already taken out of our paycheck, so we don't have to submit an additional payment to cover that liability. Okay, so then on to boxes 12. So we did address box 12D for the 401k contributions. Box 12, code DD, $12,000 for John. That represents the cost of the employer provided health insurance. So the health insurance that your employer pays for you is not a taxable fringe benefit to you. So it's not included in your wages at all up here. The employer does get a tax write-off for that, but it's not income to you if your employer is paying for your health insurance. So the information has to be reported on the W-2, but not going to be a taxable benefit to you. So this $12,000, if you were to look anywhere on your return, you wouldn't see that figure come up because it's just not reported. Now, box 12, code W. So code W represents the amount of HSA contributions made through your employer plan during the year. So HSA are health savings accounts. So this value does end up on your return. So if you have HSA contributions made through your employer plans, or if you did it separately, you have to complete the Form 8889. So on the 8889 here for HSAs, in Part 1 on line 9, we can see employer contributions made for 2023. That amount is flowing through from your W-2. So box 12, code W, $2,000 is going up to the Form 8889. And then lastly here we have the state wages. So this is a Florida-based taxpayer, a Florida-based company. So this is all Florida source income. So you notice here, no state income taxes withheld, no local taxes withheld, because Florida doesn't have a state income tax for individuals. So if you live in a state like New York or New Jersey, California, you'll see some items reported here with some state income taxes withheld. Those taxes withheld wouldn't be reported on your Form 1040 because they're not federal taxes. They would go on the appropriate state income tax return. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, please feel free to leave a comment below, and I look forward to seeing you again on the next video. Thanks.